more pockets of stocks now, and this is on the industrials. Jefferies, in a recent note, has said that the industrials in Q3 saw some sizable orders getting finalized and that they're positive on the sector. So Vamakshi is here with the details. Vamakshi, take us through the highlights of this note.
Well, absolutely. A whole host of industrial counters will be in focus on the back of this brokerage note from Jefferies. Like you rightly pointed out, Q3 saw some sizable orders getting finalized. In fact, order flow rose almost 30% on a year-on-year basis for industrial stocks under their coverage, and this was largely led by the growth seen in BEL. ABB benefited from traction order in motion railways, while L&T also saw few larger orders being awarded in railways. However, Siemens for the traction in power transmission orders is yet to be seen. Largely, the commentaries that came through from companies point to strength in railways, including metro projects, data centers, renewable energy, and revival in coal-related ordering. However, when we look at the operating leverage, that was a bit muted in the third quarter. But when we look at the operating leverage over a 9-month period, it is up nearly 114 basis points on a year-on-year basis at 11.7% for ABB, Siemens, and Thermax combined. L&T's muted margin performance, however, is expected to continue for a few more quarters as legacy projects are being completed. Jefferies believes that BHEL is a thematic story with more hope factor built in, while for the others, they believe that the earnings outlooks has still upgrade potential. As far as infra and industrial capex is concerned, they expect to see a nearly 16% CAGR over the next 3 years, which is much higher, almost 2.5 times higher as compared to the growth seen from FY11 to FY20. Overall, they have a buy rating on nearly 8 out of 10 stocks that they track. Siemens, Thermax, ABB, and KEI are some of their top picks, while they have an underperform rating on BHEL and Cummins.
Okay, all right. Thank you so much, Vamakshi, for getting us up to speed with that. By the way, in the broader markets, while